Well, I think it does seem like we're headed into a recession here in 2023. Potentially, it's on the order of 2009.
0.7% here, a loss of 37 points or so. Apple shares are just getting hammered this morning.
We're down by between 3 and 4.5% generally across these markets. Let's talk about the speed with which we are watching this market deteriorate. We're red everywhere, essentially, down by 4-5%. Dow at the same time has fallen about 18%. The stock market is now down 21%.
We're now down 43%.
What in the world is happening on Wall Street?
It was the worst day on Wall Street since the crash of 1987. Everything and more has been completely...
We're down.
Two-year no...
Yahoo...
We've been watching this closely, anticipating it as well, and it's happened. The U.S. reached its debt limit yesterday.
That's the primary concern. I mean, you know, for me, Becky, inflation has always been the relevant risk.
Well, it sounds like inflation is going down. It sounds like there's good news. It was 9% last summer. Now it's only 7%. And a lot of people are assuming that we're on a rapid downward slope. 7 today, 6 in January. Pretty soon it'll be back to the 2% we're supposed to have.
Because U.S. Treasuries are viewed as kind of the safe haven asset for the global financial system, there's this idea that if suddenly investors thought, well, if I buy U.S. government debt, I might not get my money back, that there could be a sell-off in U.S. government bonds, and that would raise interest rates across the world economy.
If the debt ceiling isn't raised, it could make for a tough financial time for already cash-strapped Americans. Homebuyers would likely see mortgage rates jump if the U.S. defaults. New 30-year mortgages could cost an additional $130,000.
What you pay for a new mortgage isn't the only impact. A default could result in the loss of roughly 3 million American jobs.
And the dollar is down. There's no question about it.
I want to make it clear, I'm going to raise some taxes.
The technology likely to have the greatest impact on the next few decades has arrived. And it's not social media, it's not big data, it's not robotics, it's not even AI. And you'll be surprised to learn that it's the underlying technology of digital currencies like Bitcoin. It's called the blockchain. Enter blockchain. Satoshi Nakamoto, 2008, anonymous person, came up with this way of people transacting, doing business with assets peer-to-peer. And trust is not achieved by a middleman. It's achieved by cryptography, by collaboration, and by some clever code. It's the underlying blockchain technology. Now people can trust each other, and they can transact with anything from money to music, to votes, to their identities, peer-to-peer.
Bitcoin is better than currency in that you don't have to be physically in the same place. And of course, for large transactions, currency can get pretty inconvenient.
So what I see crypto as is effectively as a replacement for cash.
The coolest thing about crypto is the deflationary nature. So the more people that invest, the more valuable it goes. At least for the last 100 years, we've lived in an inflationary mindset where the values it's lost over the last 100 years. So this will be a total paradigm shift where the world itself will get richer and richer as more people adopt this.
I think blockchain is going to be a very critical technology for the future development of the world. I'm a strong believer of the blockchain technology. So it will fundamentally change the financial systems in the next 10-20 years. Because blockchain technology is about trust, is about credit, is about security.
For the first time ever, not only do we have an asset that cannot be confiscated by anybody, but the first time in a very long time is we've actually allowed people to store their wealth rather than invest their wealth by taking out debt and feeding into that system.